Good morning, everybody. It's Tuesday, March 4th, 5:26 a.m. Central Time. Grain markets are sharply lower this morning. May corn futures down 6.5 at 449 and 3/4. May soybeans down 12 at 999 and a half. May Chicago wheat down 5 at 542 and 3/4. May Kansas City wheat down 5 1/4 at 556 and 3/4. May spring wheat down 2 3/4 at 588 and a half. Today will likely go down in the history books as the day that the second Trump trade war began. Let's start there.
So President Trump announced yesterday that the planned 25% tariffs on both Mexico and Canada will take effect today. Among other reasons, Trump noted the ongoing flow of fentanyl into the U.S. as a reason for the tariffs. Both nations have said that they will respond with retaliatory tariffs. Tariffs on Chinese imports will also increase today from 10% to 20% due to Beijing's insufficient efforts to address the fentanyl trade. Tariff concerns sent the stock market tumbling on Monday. The S&P 500 dropped 1.8%, the Nasdaq fell 2.6%, and the Dow Jones declined by 1.5%.
Okay, this is yesterday's news, but I think there was a contingent of the trade and just traders across the board, financial markets, that thought maybe the tariffs would be delayed again and that there could be some negotiation. And that is not what happened. Let's jump straight to the more important news, which is the retaliation.
Right. So China announced 10 to 15% tariffs on a range of U.S. agricultural and food products overnight. Imports of chicken, wheat, corn, and cotton will be hit with an additional 15% levy, while soybeans, sorghum, pork, beef, fruits, vegetables, and dairy products will be tariffed by an additional 10%. The new tariffs will take effect on March 10th. Canada also announced retaliation measures. Prime Minister Trudeau announced that Canada will slap 25% tariffs on $107 billion worth of U.S. imports. On Monday, Mexican President Claudia Sheinbaum said that composure, serenity, and patience were needed, but stopped short of announcing retaliation measures.
There it is. The headline you did not want to see. China tariffs U.S. soybeans. The news is kind of still coming out here early this morning, but China totally suspended soybean imports from 3 U.S. exporters. And I'm not sure which 3 it is. I'm sure we'll find out later today. That's not good. And then tariffs on all U.S. soybean imports. China said that it will play along to the end if the United States was bent on waging a trade or tariff war. So China is at least talking tough and acting tough for the moment. So this is no good. As it relates to China, the crop that we are concerned about would be soybeans. China, year in and year out, is going to account for ballpark 20% of all demand for soybeans grown in the United States. The demand base for soybeans looks like this. About half of the beans we grow, we crush domestically, and then we export 42% is the projection for this year. There's some other uses in the middle there, but China accounts for 42% of all exports, which means they're about 20% of all demand. I think that I read a couple things indicating that like corn was a concern. Just to be clear, China has not bought, they've bought a near zero amount of U.S. corn this year. So I don't think corn is the concern as it relates to China. Same thing for wheat. But this is just one of those events where the market is taking no chances and they have no interest in the details. That it's just, let's just sell it because we've got a trade war going on. The markets have absolutely fallen apart the last 4 or 5 days. Corn futures, the May contract has lost 68 cents after peaking on February 19th. May soybeans have lost 90 cents after peaking on February 5th. HRW wheat futures have lost 87 cents per bushel after peaking on February 19th. So this is ugly, ugly stuff. To possibly say something nice today, and I don't have very much that's nice to say about the markets, but if the narrative were to shift, and it could shift at any point, we've already seen it shift 20 different times, right? If you get Trump and Xi talking and the U.S. and China talking, and all of a sudden it goes from trade war to, oh, hey, maybe phase 2 trade deal. And we've heard that phrase, phase 2 trade deal. We've heard Scott Bessent say it. We've heard a number of people in the United States talk about it. This could change very quickly. But for the moment, it's just sell, sell, sell. To look at the positions of large money managers, now these are only estimates, but the estimates from the private groups would indicate that the funds have sold probably 100,000 contracts worth of corn just in the last 3 days. Soybeans, it's probably 30, 40, 50,000. I mean, this is a full-blown liquidation / selling event. It's just a collapse, and the news is very bad.
President Trump plans to impose tariffs on agricultural imports starting April 2nd. The tariffs are part of a recently announced plan to implement reciprocal tariffs on all U.S. trading partners. No specific details have been provided on which products will be affected. However, the tariffs will likely target fruit, vegetables, and nuts, as these commodities make up roughly half of all imported crops. The tariffs could be imposed on imports of used cooking oil from China, which of course is used for biofuel production, potentially boosting demand for domestic soybean oil. The USDA is forecasting a record agricultural trade deficit this year of $49 billion.
This is what Trump said on Truth Social to the great farmers of the United States. Get ready to start making a lot of agricultural products to be sold inside of the United States. Tariffs will go on external product on April 2nd. Have fun. You guys having fun yet? I'm going to say this, Mr. President. I think this is slightly tone deaf, just slightly. Of our three major cash crops that we discuss here, corn, soybeans, and wheat, our total supply of corn in the United States, less than 1% is imports. We're a huge producer. This is one of the only things that we produce in the United States. We don't produce much. Corn, soybeans, wheat, pork, beef, those are the things that we produce. Soybean, same thing. Less than 1% of our supply is imports. Wheat, it's actually closer to like 5%. I think we import some wheat from Canada. But in any case, I mean, the only things I could see being affected here would be, as Mackenzie said, we import fruits and vegetables. We import some seafood, coffee, cocoa, some beverages like wine and stuff like that. I just, I don't understand this story or what the goal is here, to be honest. Do you understand it?
No, it was not a good look in my opinion. And as you said, tone deaf, I feel like puts it lightly.
So now I'm going to be accused of being a liberal today because I'm being a little critical, whereas other days I'm accused as being a conservative. You guys got to chill out with your political accusations. We're just trying to do a news show here, guys. We stay away from politics.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Direct payments are coming, and I think you might need them after the last couple of days in the markets. I know that the direct payments are contentious. We ran a survey of our own subscribers, and almost half of people who responded said we don't want the direct payments because it's going to screw up everything from cash rents to inputs to just it's going to be inflationary, that sort of thing. But the direct payments are coming, and there's nothing you can do about it, and you're going to cash the checks in all likelihood. So Paul Neiffer was on yesterday, and we discussed the details, like, okay, what are you eligible for? If you've got an LLC, what are you eligible for? How many payments are you eligible for? How does the amount of Social Security numbers tied to your farm work in terms of what you're eligible for? We also talked about ERP and the disaster stuff, which there's a lot of details lacking. We also did some beneficial owner stuff, which is of importance also. This was a really good video and a good update. We had some mailbag questions that came in. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. We've got the best info out there. We've got excellent, fantastic contributors from across the ag space, everything from markets to policy to agronomics, all sorts of really cool stuff. It's if you're watching on YouTube or you're listening on the podcast, you're seeing a fraction of the info that we put out, and the good stuff is included with the premium subscription. This is a news show. The good stuff, the stuff you really need to see, the stuff that can help you make decisions, that's included in the premium subscription. Sign up today, guys. It's $50 a month. We do Cash App, Google Pay, credit card. It's a piece of cake. It takes 30 seconds. You can do it on your phone. All of our premium videos, emails are very easily accessible on your phone. Give that deal a shot this morning.
Brazil's soybean harvest is slightly ahead of last year. According to well-followed private group Ag Rural, as of last Thursday, 50% of the crop was harvested, up from 39% the prior week and also higher than the 48% recorded during the same week last year. Harvest in Mato Grosso is nearing completion. However, weather concerns persist in other states, especially in Rio Grande do Sul, where hot and dry conditions are causing crop losses. Last week, Ag Rural reduced its outlook for the season's crop to 168.2 million metric tons, down from its previous estimate of 171.
I think that generally speaking, the situation in South America is being seen as a bearish item. The soybean crop's going to be big. It looks like there's no significant issue with the second corn crop in Brazil, although it's early. Forecast is a little bit drier than normal in Brazil, but nothing to be overly concerned about. Argentina, this is maybe the bigger issue. Argentina has improved drastically. They caught a lot of rains, and the forecast is calling for above normal rainfall across most, not all, but most corn and soybean areas. So I think that just about everything out of South America that I can see for the moment is seen as being an additionally bearish item. I mean, make no mistake, the trade war stuff is absolutely bar none the big deal today, but this doesn't help us either.
India's wheat millers are asking the government to remove or reduce a 40% import tax on wheat. The request comes as the nation's stockpiles have fallen to their lowest level in almost 16 years. The low inventories have caused domestic wheat prices to rise 8% compared to last year. Stockpiles have declined due to multiple factors, including 2 consecutive years of reduced wheat production and the government's large scale release of reserves to stabilize prices. The forecast of hot and dry weather in the coming months is fueling concerns about this season's wheat crop. Since the start of the year, rainfall across India's key wheat growing regions has been nearly 80% below average.
So India could import some wheat, which could be a big deal. India is a massive consumer of wheat. They're the second largest domestic consumer of wheat behind China. They produce a ton of wheat, though. China, or India rather, is the third largest wheat producer on the planet, and they don't really import much. So if you look at those first two charts, the production is very close to the consumption, and that's why they don't really import or export wheat. But if you got into a situation where India needed to import a substantial amount, and I don't know what substantial would mean in terms of like market, like actually affecting the market, but it's something to keep your eye on for sure.
U.S. corn shipments were near the upper end of pre report expectations last week. USDA reported that 53 million bushels of corn were inspected for export during the week ending February 27th. The print was up 16% compared to the previous week and up 18% versus the same week last year. Soybean shipments were reported at 26 million bushels. The print was down 20% from the prior week and down 40% compared to the same week last year. Wheat shipments were reported at 14 million bushels. The print was up marginally from the previous week and up 8.7% versus the same week last year.
Excellent corn shipment number. Soybeans, I mean, could be better for this time of year, but not terrible. Wheat was okay. I mean, now that we have tariffs, and especially, I guess as I'm looking at this, we're in the midst or beginning primetime U.S. corn shipping season, and now Mexico is the question. What's Mexico going to say today? What's Claudia Sheinbaum going to say today? Now that the tariffs are in place, I think she's going to say something. I think there's news pending. I just don't know what she's going to say, and we hope it doesn't involve the word corn and imports from the United States.
We had a flash sale of corn yesterday. U.S. exporters sold 4 million bushels of corn to Mexico for delivery during the current marketing year. Despite ongoing tariff threats, Mexico remains one of the top buyers of U.S. corn this season.
Yes, they have been the largest buyer of U.S. corn and by a wide margin this year, and we hope that that continues, but a lot of things are uncertain this morning. What did cattle do yesterday?
Cattle futures were down only slightly, though. They were down hard early in the session. Live cattle saw losses 20 cents to 75 cents. Feeders saw losses ranging from 25 cents down to 95 cents. Box beef was higher. Choice was up 210 at 313.93. Select was up 36 cents at 302.41.
U.S. dollars lower. Stocks are off a little bit. Bonds are about flat. Gold's up $27. Crude oil is down 85 cents in the April WTI at 67.52. Have a great day, guys. We'll talk to you on Wednesday.